Hello, everyone, and welcome to the Money Flow Stock Market Review and Forecast for February 1st, 2026. I'm your host, Dr. BJ Love, and I'll be bringing you this week's update. Here at Money Flow, we use time-tested methods and indicators that helps us to navigate these markets with confidence, clarity, and consistency. Well, this past week, the major market U.S. Stock indices held up structurally, but showed more caution and choppiness, especially late in the week. Stocks didn't break the trend, but volatility picked up. Key index closings for Friday, January 30th. Here are the latest closing levels. The S&P 500 closed at 6,939, down modestly on the day. The Dow Jones Industrial closed at 48,892, also slightly lower, excuse me. The Nasdaq Composite closed at 23,462, weighed down by tech weakness, and the Russell 2000 closed at 2,614, lagging the major indices. Now, the market's broader uptrend remains intact, but the pace of the gains has slowed and breadth is narrowing, a, a signal to stay tactical rather than overly aggressive. Now, the volatility, which is the risk gauge or the fear gauge, the VIX closed at 17.44, ticked higher last week, increasing anxiety around positioning. Now, as we iterate here at the money flow, as long as the VIX stays below that threshold of 20, the markets tend to grind higher, as we have seen over the past year, even coming into 2026, just having a shallow pullback on Friday. Now, commodities with oil, Western Texas oil closed at $65.21 per barrel as of the close of Friday. Now, oil remains within its uptrend. It shifted from a downtrend into a recent uptrend. We're going to look at that a little bit closely in the XLE, the energy sector, supported by geopolitical risk. Now, gold and silver had some wild moves last week after hitting record levels earlier in January. Precious metals gave back a big chunk of those gains. Now, gold closed at approximately $4,745 per ounce, a sharp decline from recent highs. Now, silver closed at $78.53 per ounce, a historic plunge off of the peaks of around $109. Now, these moves reflect both profit taking, as we did some profit taking here at Money Flow, and volatility spikes tied to the changing expectations around the Fed policy and the US dollar, and again, geopolitical risk. Now, Bitcoin has been in a range of around 78,000 to 84,000 as of Friday's close. Now, recent data show that Bitcoin is sliding off recent highs, is in the mid 80K area. Relative strength advantage for the sectors. Now, this is a section that we really look at closely, and what we have found this week that have held up well is the energy sector, supported by firm oil, materials, commodity sensitive remains, that is, dealing with the oil, not the oil, but the gold, precious metals, aluminum, steel, rare earth metals, and so forth. Now, the industrials, cyclical, still are drawing in capital or bringing in new money, smart money, and of course, the technology sector uh, is keep showing its leadership, albeit that with rotation inside the group. The communications sector, stable flows. We monitor the smart money that is flowing into these particular sectors, and the XLC the communication sector revenues beginning to strengthen into that sector. Now, together, this mix support a broader market uptrend, even when the indexes pause or pull back, as we saw on Friday. Now, what to watch next week? This is the short term, 1 to 2 weeks. Expect continued range trading and consolidation. Rising VIX and small cap lag suggest caution and not breakdown. Now we're going to go to the medium term, which is 1 to 3 months. As long as the major averages stay above key weekly trend support, the broader trend remains constructive. And we're going to look at that in the charts here soon after this introduction. Now keep an eye on geopolitical drivers. Keep an eye on Fed-related rate expectations and sector rotation. Now, the bottom line for the subscribers, my beautiful and supportive subscribers, really appreciate you. Major stock indexes remain structurally bullish. Volatility has increased and two-way markets are back, meaning we might go back and forth until a significant or trend is reestablished. Now, commodities and precious metals are in turbulent, high volatility regimes. Now, Bitcoin remains in a corrective phase, so we're gonna take a look at that. And our RSA, which I refer to as the relative strength advantage sectors, still show smart money positioning. We just read those off, especially cyclical and tech. Now, this uptrend is still intact. So stay invested, stay selective, and stay disciplined. Now, this broadcast is prepared for client distribution, and it is not investment advice for educational. It is for educational and informational purposes only. Now, let's get into these charts, and we're going to look at what's really happening. Now, as we go into our 4 grid, if you've been with us for a while, we know, understand, and have experienced whenever we have a green background, right, that trend is still bullish, and that is what we have on all 4 of the indices. So what we're going to do here with the S&P 500, we're going to go ahead and maximize this chart so we can see what is really happening. And as you can see, since we moved into a bullish trend, long-term trend. Now remember, this is our weekly long-term outlook. And as we always say here, long-term trends dominate, short-term trends fluctuate. So we just saw a short-term fluctuation that took place on Friday. However, we still have a long-term trend intact. So right here on the S&P 500, you can see that we have a green background. Prices are above our 10-week and 40-week moving average, letting us know that we still are in a long-term uptrend. Moving on to the Dow Jones Industrial, as you can see, it's similar pattern. These price bars here represent 1 week of trading time. So each price bar is 1 week, and week after week after week after week, even though we've had some trepidation, we've had some shallow pullbacks, we've had some up and down. We did hit a new high in the week of January 12th, and we pull back slightly, but we're still above a rising moving average. Here at Gibraltar, we believe that as long as the price is above rising moving average, we don't panic, we don't fret. We understand that you're going to have these shallow pullbacks, but the trend, the major trend, is still intact. Okay, now we're going to move on to the NASDAQ composite, and as you can see, it's starting to level out a little bit, and we do have in our confirming indicator, which is our MACD, that it has turned negative. So that's just letting us know to be very, very cautious. Don't take any new positions right now. You're going to wait until we can see our MACD turn positive, and then that will give us the confidence and the certainty to move back into those tech stocks that we like so much. And I'll give you an example of one of those since uh, the XLK is one of our uh, RSAs or our sectors that have relative strength and advantage. Now moving on to the Russell 2000, even though we have a little bit more volatility with the price movement because of the small cap, but what is the bottom line? Prices are above the rising moving average or above our 10-week moving average, and it is above our 40-week moving average, and there is separation uh, in those particular moving averages. So now with that said, what is our takeaway? We are still, as we uh, read in our introductions, our long-term trend is still intact. So we don't worry, we don't fret. We're just going to wait, watch, and see how this turns out. And it looks like our trajectory is going to continue to be up until that trajectory changes, until we break um, below one of these moving averages. We are going to be confident and certain that this trend will continue to uh, move up, up, up. So with that said, now we're going to look at our uh, RSAs, our relative. Um, we're going to look at our relative strength advantage sectors, right? So we go to another chart here, and we're looking at a weekly chart again. So what do we have here? We're saying that our XLE, we looked at that. That is the energy sector right there. And for the energy sector, the stock that we have in mind that has been working very well for us for the past few weeks has been PBR, that is Petro Brasilio. And you can see it for the past 3 weeks, it has broken out on heavy volume, and the relative strength is really, really rising. This is a $15 stock right now that pays a 8% dividend. What is our next RSA or our relative strength advantage sector? That's going to be XLC. And what we like to do here at Gibraltar, we like to find the strongest sectors and then try to find the best leading stocks within those sectors and industries that we can invest in. Now, the XLC shows relative strength advantage, and for our communication, um, nah, we're going to wait on that, but we're going to continue on with the XLI. And this is the industrial. And as you can see from the weekly chart here, long-term, relative advantage, relative strength. And we like, we're going to, yeah, we'll move on to, we looked at the XLK, right? XLK is one of our relative strength advantage. And what we like in the tech sector is our a friend in the tech sector is called UMC. That is the ticker symbol. And it is a $12 stock, and it's showing very good promise. And boy, it has really, really taken off since we got the signal back here in early December when it was $7.76. Now we're going to look at metals. You know, they took a hit. That's to the XME. That is our relative strength advantage. And within that particular sector, we're looking at ticker symbol NGD, right? So he's still working on that long term. And last but not least, I believe that's it. I believe that's it that we're going to look at those particular indices or those particular stock symbols that we like when we see the short-term um, start to turn around. So that's it for today. Every day and every way we get better and better. Every day and every way we grow more prosperous, successful, and